Hey everyone, welcome back to another dividend investing video. February was a huge month for our dividend growth income portfolio. I sold out of a couple positions and continued to dollar cost average into the portfolio. Now, if this is your first time with us, the dividend growth income portfolio is a Fidelity brokerage account I started about a year and a half ago so our channel could follow the growth and development of a new dividend growth portfolio. And this is just one way to do it. I'm not saying it's the best way or the right way. It's one way to do it. Now today, I'm going to go over the stocks I bought and sold, and I'll show you the dividend income this account received in the month of February and how things project to look going forward. Even as the markets continue to push to all-time highs, we've been sticking with our plan, and that's buying more stocks and ETFs every single week. We have a lot to cover this time, so let's hop right in. I'm Nick, and this is the Dividend Growth Income channel. Thank you for joining me today. I'm not a financial advisor or guru. I'm just a regular guy who wants to share my love of dividend growth investing and building financial independence with passive income. If you could, please do me a favor, smash the like button and subscribe to keep up with future videos. This helps us out more than you can imagine with the algorithm, so we can bring you more quality dividend investing content. I'm recording this on the weekend of March 2nd. February was a short month, and I wasn't able to push this video out Thursday night just due to work and family stuff. Now, March 1st was a good day in the market, so right now the account's sitting at about $22.6 thousand in value. And this is from adding funds consistently every week. Wednesday has been my designated day for purchases, just for the sake of having a plan, not necessarily looking to time things. And growing this account as a guy who doesn't have a ton of money to invest, but I can make small contributions that really add up over time. Now, I started this in September of 2022, and I'm pleased with how this is going so far. Let's move to my portfolio spreadsheet. This is the dashboard page of my portfolio spreadsheet that I'm working on. Really, it's just something I use to present this information to you guys. It's basically a summary of where things are. I can see where we're at, how we're doing, and track things like performance, dividend income, and goals. So, as mentioned, this is actually February plus March 1st, which was a green day, so we're sitting at $22,588.44 in market value today. And that's off of $20,450 in contributions. So I have an unrealized gain of 8.27%. That's on the investments made, and a true gain of 10.46%, which includes all the dividends we've received and reinvested. So to be up over 10% on my investments since starting this account 16 months ago, I'm pretty satisfied with this. And I'm sure I'm going to get a comment that says, well, you've not beat the market over that stretch. And I have a video coming out for those of you on exactly that topic and why that's not necessarily the aim for this account. Now look for that in a week or so. Right now, as far as dividend income goes, the portfolio is yielding 2.87%. This has dropped some as I've sold out of some of my higher income positions, but high dividend income is not the goal of this account. So if the goal is not beating the market every year or collecting as much dividends as possible, what is the goal? It's dividend growth. And this is where I'm focused. To me, this is the right balance between dividends, investing, and total growth. And I want the dividend income in the account collecting to be growing at an above average rate, or at least at a rate that beats inflation. And I think we're doing pretty well with that. Right now, we're collecting about $650 in dividends over the next year. And that's not going to do a whole lot, but it will provide a nice boost back into the account over the next year as I use these dividends to buy more stocks. Now that's $650 in dividend income. We could think about that a few different ways. It can be thought of as $54.09 per month, $12.48 per week, or $1.78 per day. And here we have some forward income goals. We've already crossed a few of them, $100, getting $1 a day, $50 a month, which we recently passed. I think by the end of 2024, we're going to hit this $100 a month goal on average. We're 54% of the way there. I think we're on track to do this, but I'm not going to chase yield to make that happen. If it happens in 2025, that's fine too. The idea is we can measure our progress, see how far we come, and how far we have to go to get to these goals. All right, so February was a month I sold out of 3 stocks I've been wanting to cut ties with for a bit. On February 6th, I sold out of Best Buy, ticker BBY. Sold 5.239 shares for $391.35 for a gain of 0.51%. But if we consider the dividends Best Buy paid out that I reinvested, the actual gain here on my investment is about 4.5%. I sold out of Best Buy because I don't see them to be able to continue doing over the next 10 years what they've done over the last 10 or 20 years. In fact, weeks later, my decision was validated by Simply Safe Dividends when they lowered the Best Buy dividend safety score to 60 and expect the payout ratio to remain elevated based on their softened demand. Now, Best Buy recently raised their dividend by a measly 2.2%. Maybe they'll pull through this. They probably will, but I just see so many better opportunities for my cash. I also sold out at AT&T, ticker T. I had 14.41 shares that I sold for $253.75. Now, as far as share price, I was down about 4.5% on the sale, but I collected near $16 in dividends and reinvested it. So this actually put me up over 1.5% on that investment from the perspective of money added in the account and invested, of my own money. That's the total gain. And I finally also sold out of Kinder Morgan, ticker KMI. This is an oil and gas pipeline company. Another place I felt I could cut my ties there and just put the funds somewhere more growth-based. I sold my 20.727 shares for $344.90. This was a near 6% loss on paper. But if we factor in the $21 in dividends I collected and reinvested, I came out pretty much flat on that investment. So what did I do with the sale proceeds of about $990? I spread them amongst most of the investments in this portfolio rather than adding anything new. I put $100 into SCHD, $100 into VYM, $100 into Vici Properties, ticker VICI, $100 into Snap-on, ticker SNA, $100 into MasterCard, ticker MA, $100 into Lockheed Martin, ticker LMT, $100 into Chevron, ticker CVX, $100 into Automatic Data Processing, ticker ADP, $100 into Medtronic, ticker MDT, and $90 into BlackRock Inc., ticker BLK. Now, these transactions ended up lowering my dividend income projected by about $30. This was a temporary sacrifice I was happy to make in order to consolidate this portfolio a little bit and remove as what I saw 3 underwhelming companies that I don't think had a long-term fit for what I am trying to do here. Now, in the month of February, I also added $1,450 of new funds into this account. Every Wednesday, I added $350, right? I also added a little extra on one day because I do have goals here I want to smash. I want to get 18 grand invested over the year 2024 in this account. And 2 months in, I'm pleased to say we're nearly 18% of the way to this goal. So I think we are on track. Now let's go over how I invested these funds. On February 7th, I added $350 and I put $100 in Aflac, $100 in Comcast, ticker CMCSA, $100 of MasterCard, and $50 in Vici Properties. On February 14th, I added $350 and I bought $300 of Snap-on, ticker SNA. After they had a rough week on earnings, I took the opportunity to bring that up to one of the top positions in the fund at a price I was happy to do so at. I also added $50 to VOO, an S&P 500 index fund. On the next day, I had an extra $50 burning a hole in my pocket, so I thought, this is a chance to push a little extra into the account, and I bought $60 worth of Comcast, as I'd collected some dividends from AT&T and Kinder Morgan that did not get reinvested. Then on February 21st, I had another $350. I bought $100 of MasterCard, $100 of Home Depot, ticker HD, $100 of NextEra Energy, ticker NEE, and $50 worth of VOO. Finally, on the 28th, I added the final $350 for the month of February, and I bought $100 of Aflac, $100 of Amgen, ticker AMGN, $100 of Main Street Capital, ticker MAIN, and $50 of Broadcom, ticker AVGO. This is a busy month. All right, February was not a huge dividend month for this account. I don't hold a lot of those February, May, August, November pay cycle stocks. And with the loss of AT&T and Kinder Morgan, these months lost even more income. But on February 1st, I received $3.93 from AT&T, my final dividend payment from that company. On February 9th, I received my first MasterCard dividend in the amount of 16 cents, which wasn't even enough to reinvest and to get a thousandth of a share. But we are building this one up, and it's more of a dividend growth play than an income play. I want to see more MasterCard, less AT&T in this account. That is the way I would like to describe this account right now. On the 14th, I collected $2.83 from Agri Realty Corp. This is one of 2 REITs in the fund and 2 of the monthly payers in the fund. The next day, on the 15th, I received 2 payments, $5.86 from Kinder Morgan, my final payment from them, $3.81 from Procter & Gamble, ticker PG, which was reinvested. And finally, on the 20th, my dividend from Main Street Capital in the amount of $3.37 hit, and this was reinvested in well. Altogether, this is $19.80 in dividends for the month of February, as well as about 50 cents in interest. Going forward, these months are projected to pay out about half this amount with the loss of KMI and AT&T. But this is a move I made for the long-term health of the portfolio, and I think it's a better portfolio now without those stocks. Now, speaking of which, here's how things are looking now as we enter the month of March. This is all the holdings in the portfolio as of now, sitting at around $22.6K and $650 in forward dividend income. Let's sort this by weight. I think that gives the best picture of how this account looks. As it's always been, my top 3 holdings in this account are ETFs. I'm currently lowering my weights in the ETFs right now because I invest almost 100% ETFs in my Roth IRA. These 3 tickers are going to remain the heaviest weighted funds of the account though. Over time, I'd like to increase my VOO over these other 2, SCHD and VYM. Maybe have them, by the end of the year, we have these 3 at a more equal weight is kind of the goal. But I really love the diversification and hands-off approach that ETFs provide, so I do want the portfolio to take advantage of that to a degree and be the foundation. And then the highest weighted funds, the top 5 holdings in this account as we are today are Chevron, ticker CVX, Snap-on, ticker SNA, Home Depot, ticker HD, MasterCard, ticker MA, and Vici Properties, ticker VICI. I think that is a fantastic top 5. I see all 5 as core foundational holdings in this account alongside the ETFs. And as I build these, I don't want any individual stock to weigh more than 5% of the account's makeup aside from the ETFs. Those can be higher. Now, performance-wise, I am in the green all across the board here for all of them except 6. And I'm only down a lot on 2 of them. That's Agri Realty and Next Era Energy. I would not mind seeing pullback in more of these positions. In the next week or 2, I'm going to put out a more in-depth analysis of this portfolio. I'll step through each position and tell you kind of how I see each in terms of valuations and how much I want to be buying that one right now, basically. So make sure you're subscribed for that. Now, let's say in the immediate, I'd like to focus on the positions I'm in the red on and continue to build up a few of these hanging down the bottom, like Mondelez, Amgen, United Health. They're all stocks I love. And when the sale of the other stocks, no stock here has no less than $500 of value. And I think this portfolio is coming along nice. I really like the way this looks now without those other stocks. Right, here's a quick look at how the performance, seeing how we did for the month. We started out with a value of $20,869. We added $1,450 in contributions and ended up with a portfolio value of $22,481.03 at the end of February. In terms of investments, the portfolio was up about 0.72% over the month of February. I collected almost $20 in dividends for February. And entering March, we're at $649 of forward annual income. This is less than the $20 improvement over January, which looks small when you realize I did add almost $1,500 into the account, but this is mostly a result of selling out of those high dividend stocks like Kinder Morgan. This is the 4th consecutive month of the portfolio being in the green. We ended November and December with a bang, up about 10% over those 2 months. And in 2024, it's still holding strong. Here is my favorite page in the spreadsheet. It's my forward annual income. Guys, this projects the next payments I'm supposed to be getting over the next year as things stand right now. We're super heavy in those months of March, June, September, and December. And these recent sales only solidified that. But the good news is we are in March now. And this March is on track to hit a record month. This is the first month of more than $100 in dividend income. Now, some of that's going to depend on how much SCHD and VYM happen to pay out this month. And that variable nature of the ETF payments is one thing as a dividend investor I'm not crazy about. Is I do like the certainty these dividend growth stocks give us. But we should get somewhere around $110 this March. I've already gotten my first dividends from Kroger and Aflac. But we should get somewhere around $110 this March. I've already gotten those first dividends from Kroger and Aflac. And then in January, April, July, and October months, these payouts are around $40 and $45. And then February, May, August, November has dropped down to $12 a month, which only 4 companies in the portfolio are paying those months, one of them being MasterCard, which doesn't pay much at all. It's sure going to be nice, though, to get that $100 invested here in March, that additional $100 from those dividend payments. And that's only part of the snowball of dividend growth investing, that dividend reinvestment. And a few of the companies offered up nice dividend raises. That's 4 to be exact. On February 2nd, Chevron announced an 8% dividend raise. That's 37 straight years. Very happy to get that news. That's a little higher than I expected from them. Then on February 14th, Cisco Systems, ticker CSCO, announced a 2.6% raise. Pretty underwhelming, but I guess that 1 penny raise has sort of been their thing. We had Next Era Energy, ticker NEE, come in at 10%, projecting their ability to continue these raises through 2026. Happy to see that. And then on the 20th, Home Depot came out with its 15th annual consecutive raise at 7.7%. So I'm glad to see these companies continue their dividend growth streaks. Guys, lots more to come this month of March from us. We had a busy few weeks in real life, so I do apologize for not getting much content out lately, but one thing that's not stopped me from doing anything is investing every single week here and in my Roth IRA, and I'll share more about that in my upcoming video as well. Let me know down in the comments what stocks you're buying in the month of March. Let's share some ideas with the great community we have growing here. I appreciate each and every one of you. And until next time, my friends, keep investing.